Hello everyone, my name is Dasuki, and today our group will present a comprehensive financial performance analysis of Dutch Lady Milk Industry Berhad, covering the year 2020 through 2024. Established in 1963, Dutch Lady is a pioneer in the Malaysian dairy industry and was the first milk company listed on Bushra, Malaysia back in 1968. As a subsidiary of the global giant Friesland Campina, Dutch Lady dominates the market with a 40% share in the liquid milk segment. Their core business involves manufacturing and distributing household favorites like Dutch Lady, Dutch Baby, and Frisolet. We choose this company because it has recently undergone a massive strategic succession, moving from its old Petaling Jaya plant to a new 540 million ringgit state-of-the-art facility in Banda Estate. Today, we will break down how this massive investment impact their liquidity, profitability, and leverage. I will now pass it to Zikrul to discuss the strategy overview and revenue trends.
Thank you, Dasuki. I am Zikro. To understand Dutch Lady Malaysia Financial, you must understand their strategy. The key event of this 5 years period was the completion of the Banda and Stack Mega Plant in 2024. This plant is not just a factory. It is an IR 4.0 smart facility designed to double up and drive future margins. Looking at the revenue trend, Dutch Lady Malaysia has shown incredible resilience. Despite global supply chain disruptions, revenue grew by 31% over the study period. We saw sales rise from 1.1 billion in 2020 to an estimated RM 1.44 billion in 2024. This steady growth proved that brand loyalty remains high. However, while the top line revenue is growing, the cost of the new plant have created some unique dips in other areas. To explain this profitability and liquidity shift, I will hand over it to Fitri.
Thank you, Zikrul. I am Fitri. So, when you look at the LMI's net profit, you will notice a massive spike in 2021 where profit hit 248 million ringgit. It's important to note this was a one-off gain from the sale of their Petaling Jaya land. By 2024, the net profit has stabilized to a healthy organic 96.7 million ringgit. Now, let's talk about liquidity. The current ratio tells us if the company can pay its short-term debts. In 2021, it was a strong 1.58, but it dipped to 0.84 in 2024. A ratio below 1.0 generally suggests tight liquidity. So, why the dip? Because the LMI chose to reinvest its cash into the Banda and Stack project. While liquidity is tight now, it is a strategic move for long-term expansion. Next, Aiman will dive deeper into their efficiency and leverage. Over to you, Aiman.
Hello everyone, thank you to Fitri for the explanation and presentation before. My name is Aiman and today I will be take part for how efficient the ready-made industry was during their expansion and how much debt they are took to fund their new estate plan. So let's begin with their leverage position. So first thing first, to build their 550 million ringgit as that plan, Dutch lady had to rely more on borrowing because we can see clearly increase in their leverage ratio. By 2024, the debt to equity ratio went up to 260%. At first, this may look quite high, but it's important to understand that this happened because the company was investing in a long-term growth. Now the construction is completed, so the stadium industry is expected slowly reduce its debt moving forward. So next, let's look at the efficiency. During the relocation period, inventory turnover dropped and reached its lowest point at about 3.4 times in the 2021. This was mainly due to supply chain disruption and change its operation. However, the new plant and distribution center become fully operational, so efficiency start uh, to improve and inventory turnover recovered to around 4.0 times, 4.0. So at the same time, fixed assets turnover changed because the company now owns much more fixed asset to build the new plant. So overall, Dutch Lady is currently is a both asset. It's a both which is asset heavy and debt heavy. Sorry, which is actually normal for company that is an expansion or growth phase. So with the investment phase completed, the focus will be improving the efficiency and reducing the debt. So I will pass to Khairuddin, and Khairuddin will be explain about SWOT analysis and find outlook. So thank you.
Thank you, Aiman. I'm Kai. To summarize our findings, let's look at the SWOT analysis here. Dutch Lady Malaysia company strengths include its 60-year brand's heritage and 40% market share. The opportunities lie in the IR 4.0 technology at the new plan, which will reduce long-term costs. However, they face weakness like high debt and sensitivity to raw material price volatility, and also threats includes the fluctuating ringgit Malaysia versus USD exchange rates, which also affects their import costs as well. And in conclusions, Dutch Lady Malaysia company is a resilient blue chip company. They have successfully managed a high cost transition phase while maintaining a strong revenue growth. As they enter the post-NSEC era in 2025, we expect to see margin expansion and high debt reductions. This complete our group presentation. Thank you for listening.